As we kind of wind down earnings season for the second quarter, we've seen a number of retailers raise concerns about the health of the consumer. Cautious is the word we keep hearing, and we've seen those retailers reduce some of their sales estimates. What's been your big takeaway from earnings season in terms of the state of the consumer?
Well, again, just looking at the level of spending, the state of the consumer is stable for now. We did see a little bit of a downtick in consumer confidence, but it's still at 69.5. That reflects a much different view from where you're looking at things in terms of like manufacturing and the PMI indexes. So there's some stability still there from the consumer's point of view. Now, there are concerns that there could get softer sales by the end of the year, or maybe even just the end of the third quarter. And then again, it reaccelerates by the end of the year. The biggest window for us, again, is looking at the labor market. As long as there are more people working and making more money, then they seem to be confident spending it. And keep in mind, as prices have come down, even Chairman Powell reflected this, that real wages are starting to go up. And again, that's that reacceleration in growth in the economy that he's being really wary of. And so we're definitely at an inflection point where it comes to the consumer. And the Fed is obviously trying to engineer a very delicate decline in that consumer spending so that we don't create a hard landing recession. There's no question about that. And the results obviously are going to be reflected in the data. It's just the rate of change that we have to study so carefully to make sure that, monetary policy hasn't been too restrictive for too long. And at the moment, it doesn't seem like it has been. So it probably just seems like we just simply stay at 5% or higher for longer than the market is currently expecting.